To another XLM video, and in this video I'm going to be talking about just the basic stuff when it comes to what's going on right now. Right, there's no need to basically recap on the whole damn thing, right? Because obviously you know that price has still not gone above the all-time high. If you can't see it, then it's pretty, obviously you don't know what the hell you're looking at on a chart here, but it's pretty obvious it hasn't gone above the all-time high. Now, wouldn't you expect that by now an impulsive moving wave 3 would have started producing better results than what you've seen right now on the page? And the truth is, it should have. It should have. Wave 3s don't just stop like this and have a little bit of a good time and mess around and relax. Wave 3s are brutal. They move the fastest. They don't stop. They keep going. They catch you out. But the thing is that usually the rest of the market is doing good, right? It's also in the middle of a bull run. Now, if you think any other market is in a bull run, in the middle of a bull run right now, well, you're sadly mistaken. I've been reporting on those as I go along. And the truth is that, you know, this is actually starting to look a lot like what happened after 2017. The top, right? The January 2018 decline that started to look like, oh, it could have been correcting also, right? It also could have been correcting in this manner that looked like a corrective pattern, but only turned out to be a weak 5 wave move that turned into a 5 wave move after the corrective portion of wave 2 occurred, and then you had wave 3 and wave 4 and wave 5, which ended down at 2020 COVID levels, right? So this is exactly what I'm thinking is happening right here. Okay, it's exactly the same thing, right? So I would dare suggest that you just keep paying attention to what is happening here, and you're not going to see it go above the previous high, right? As I mentioned already a couple of times in previous posts, that it looks like to me this is moving lower. And every part of every move within this little mini structure that we have here is telling me that we're going to see something similar happen very soon, where you're going to get a correction, a bit of bouncing going on, and then it's just going to continue lower, right? It's not going to be a straight line down. Okay, if you look at what happened back here, you had the 1, the 2, the 3, hang on, let me zoom into this so I can sort of just, all right, let me just expand it out a bit. Right, so you had like basically it was like 1, 2, 3, 4, 5 weak move in there, right? And the corrective portion here was simply put from this spot here where it was an A, B, C, D, E, right? The five waves that I always talk about, the Arias wave components, right? A, B, C, D, E, before you get the wave 3 down. Now you can see how choppy that is. It almost looks impulsive. You could have almost assumed that this particular wave here would have kept going higher, but it's not. It's not the way it is, and I don't think it's going to happen now. Okay, you might see another A B move down, coming down lower. C bounce looks like it's going to go higher, and then you're going to get the same shit again. So in I suppose it's difficult to trade this type of move because it's a very expanded wave 2 with a very choppy uh, correction that doesn't have a short stop, right? Your stop for this end of this move would have had to be all the way back at the highs, right? So it's very hard to trade the first move down unless you maybe look at trading, within the wave 3, the wave 2 of the wave 3. Your stop might be a little bit smaller, but in general, like, it's just a guide for me to say, look, hey, if I see a setup, I'll let you know. But in general, these moves are pretty choppy. So it's not like an impulsive move where you're going to get, some kind of target and you can just hit that target, and you're good, right? Like, in this case back here, you could have just said, oh, the length of wave 3, right? You could just take the trade off when you get to a certain point, the same length of wave 3. That's okay. You can do that type of thing. But any further than that, and you're just gonna, waste your time. So I suppose what I'm trying to say is that trading this C wave down may not be a good idea. But instead, the reason I try to tell you about what it's doing is so okay, for starters, you understand that there is some basis, there is some substance to my claims that, hey, this thing is not going to go higher. Why is that? Don't you want to find out? Aren't you curious? Don't you think there's a reason behind it? Don't you want to find out what that is? Because if you've done all your analysis, including Elliott wave garbage, which this is not, by the way, and you've done all your other whatever cycle analysis or even just regular technical analysis tools to say, oh wait, hang on a minute, RSI has rebooted itself and we're ready for another move higher. If that shit doesn't work out for you, wouldn't you be curious as to what does work? So there's that. And also, like, well, uh, we just want to like buy it cheaper. Like, that's basically the reason why I would even be suggesting that this is the case for myself, right? Because if you didn't give a shit and you were just bullish for the long term, well, just fine. Just buy it now. Like, what does it matter if it comes back down and it breaks the previous low of 0.02 or whatever? You don't give a shit, right? Because you're buying it at any level. Just keep buying, buying, buying. Well, what do you care, right? Absolutely. This is bullish for the long term. I agree completely. I'm not saying it's not. But if you want to buy it cheaper, then this is the way I would do it. This is the whole reason I created Arius Wave, is to buy it cheaper, right? If you can buy 3,000 of them up here at this price, and you can buy 50,000 of them down here for the same amount of money, obviously it makes a lot more sense to buy it down here, right? So why wouldn't you? Okay. Obviously, it's all about efficiency, more bang for your buck, unless you don't give a shit about that and you're just here to, but for those people out there who do like technical analysis and think that there's probably a better way to read the markets, well, this is what it is. It's right here. I offer coaching. Go to rswave.com, send me contact me via the form and we can organize some coaching for you at some point if you get interested in that, right? We can have a chat. But the point is that here, this pattern happens at all degrees of trend. We're in an A wave, zigzag, the first part of a corrective pattern that's just taking a long time to unfold. But it does mean it's going to come back down below the red line that you're seeing there on the page, right? 0.02. So if you don't believe that and you find yourself to be wrong after a period of a few months or a year or whatever, you could always come back to me. I won't have any judgment. It's all good. We all make mistakes. Been there, done that. But until then, hopefully you enjoyed this update when I get a bit more clarity on the actual internal waves here, especially when you start to see the A, B, C, D, E side of wave 2 for the C wave incoming of 5-wave move, wave C. I'll probably post something else. Have a good one.